What is up, everybody? All right, Ted here again, back with some bodies and wicks. Isn't that clever? Isn't that clever? Anyways, I am still stuck on a gold kick. I was gonna do Zcash, but and maybe I'll mix it in with this one. But yeah, I'm still on the gold kick. I thought I was actually about to record something, well, record a good moment. Turning out not to be such a good moment, but it's turning out to be something. But we'll see. We'll see. So, and we'll see how this how this all ties in with smart money. So in case you haven't noticed, you stumbled onto a smart money channel. What smart money is it's basically the opposite of retail. Anything that you've probably been taught as a trader, you basically want to throw that out the window. Basically we don't, trade off trend lines. There's no geometrical shapes that we look for to trade off of, like triangles or bull flags or bear flags, or, no harmonics. Harmonics never really work, unless you're in, like, a very a specific part of a seasonal pattern, to where it's in like a consolidation. It's about the only time harmonics work. Other than that, harmonics, can just basically distract you. So we recognize that the charts, everything that goes into the charts are based on an algorithm. So it's not like, hey, everybody buy here, and then it goes up, and then, oh, people are selling, so then it goes down. No, basically what's happening is price is looking to balance, and it's looking for liquidity. That's what's happening at all times in the charts. Or when a news event hits, we know that there's going to be a lot of volatility. It's not like when FOMC hit today. I don't know if you noticed in, like, if you're not a crypto person, you probably noticed it in the Bitcoin charts. There was a little bit more volatility than normal. But, like, gold dropped out of nowhere, S&P dropped, like all these different things dropped. And it's not because people were selling, it was just because it was a high impact event. And that was part of the algorithm. It was pre-programmed. We knew it was coming. And I knew it was coming today, and so I stayed out of the trades pre-12. I stopped my trading this morning at 11 a.m. And then I waited until after the market, well, with Forex anyway, the market closes from 5 until about 6, and then it reopens again. And then once it reopened, we all got, or at least I got back into trading because everything was at its lowest. So if you watched my last video, you know that why I got back into gold. And I used, for one, somebody sent me a signal, and I pulled up gold, and I realized that signal was completely wrong. He actually had a stop loss, which was 1807, as the entry. I could just tell because the 1807 was right below an area of liquidity, and I knew it was going to keep dropping and get below that area. So I pulled the trigger at 807, or sorry, it actually dropped so quick. It went down to 1803, but it pulled back up so fast that once I hit buy, it was already at 1810. And then I pulled a portion off at 1818, and now we're still going. And I didn't pull another portion off when it got back up. Here, I'll show you now. We might as well just go to the charts because I'm explaining them without even doing anything. First, I wanted to get some music going for you guys. Hopefully, it's not gonna outpower my voice like it did that one day. All right, there we go. So let's head on over to the charts. So this is gold right now on a 5-minute chart. I'm kind of got it spread out pretty far. So this was, you know, going back to the 7th. As you can see, it went all the way until today, came back up and then dropped. Now I can tell you right now, this thing didn't drop just because of FOMC. If we look closer, you see a liquidity line forming. Liquidity line meaning that this is where there are orders in the market. Right, so people either had sell limits sitting around this area, or buy or buy stops. So you can easily see it as it dropped right here. Comes up, hits this area, drops, comes up again, drops, comes up again, drops. So what do you think people are thinking when it comes back up to this area? Probably start selling around this area, right? And then put your stop loss just maybe a little bit above that area, because you know it's probably not gonna get much higher than that. Instead, it shot way up. I wouldn't say way up, well, way up for gold anyway. Went from 1861 to 1863. Okay, yeah, that's a couple dollars. So anybody who may have had a sell limit going through here got lucky. Definitely got lucky. But it did trigger the, it did go get above the liquidity, triggering the buy stops, and then dropping dramatically during, this was 2 o'clock New York time, so that was exactly when I believe that was exactly when it was happening. Let me see here. FOMC 1 p.m. FOMC press conference 1:30. So it was probably during the press conference when they were asking questions to Fed chairman and all those. I watched a breakdown of it afterwards, and talking about inflation and all that is basically what it was about. Nothing about crypto, thank God. But as you can see, as it was coming up, it stops, you know, right along here. So if we get out of the 15-minute time frame, or sorry, the 5-minute, and go to the 15-minute, what does it do? It hits a bearish order block, right? So I guess somewhat of a bearish order block. This last green candle up before the breakdown. There was a couple candles in between. I'm sure that in the hour that was probably there. Yeah, there it is. So in the hour, which trump, higher time frames trump all. So you can see, and I mean, you can count the entire wick. It didn't make it quite to the body. It did with, well, but I mean, this entire thing basically is your order block. That whole green candle, right? So that is your order block. So that's why it came up, probably got knocked out, came up, got knocked out, and then came up back into it pretty hard. FOMC news, boom, drop. All right, and it dropped until the entire rest of the day, until the market opened back up again. So you can see market closes at 4 o'clock, opens back up at 6, and what do you know? Well, actually, hold on, we need to get a little bit closer in the hour on this one, because the market back opened earlier than that. So 1640, here we go, 440. I think it was probably around, I'm not for sure exactly what time it was. I got the notification, but you can definitely tell that price was definitely on its way down. And like I said, I think the buy order was at 1816, and that's when I got the notification, and they said the stop loss was at 1807. As you can see, it got to 1803. And if I go back to the hour here, this is above the 1816 right here. Whenever I pull out the chart and I saw this and 1816 and it was pushing down further and further, I said it's gonna break this liquidity area. So here would be another area where you would have, buy limits, people trying to buy right around in this area because they would think of this as support, and also sell stops, because people would try to hope that this would, break short, maybe come back up, retouch as a retest, and then break lower. And as you can see, it did neither. It did not stop there and go up, and it broke through and came back up, and it came back up with a vengeance. Like, I'm not even kidding. Okay, so this is 1803 was the lowest, and what is that, 1808 was the line across. And like I said, as soon as it dropped, I tried to buy, and I bought in at 1810. So that's how lightning quick that went down. Basically, the red line here from here to here was how quick it dropped in like a millisecond. And I couldn't even get in at like 1804 or anything like that. It was crazy. So we'll get back out of the, so that's partly what we mean by smart money is, think outside the box. Don't think that just because there's a low there, that is a definite, support level. You gotta think of that as the people that have the, you know, all the money in the world, who know this algorithm, who can push this algorithm around if they want. Are they going to be buying at that same level too? No, because they know you're gonna be buying at it. So what are they going to do? They're going to push through it and then make you hit your stop loss. That way your money is gone. You've lost that bet. And now it's going into the broker, which is getting passed on to the person who was like me, waiting for it to get past there and buy in somewhere down in here. But unfortunately, I bought in somewhere up here. So where are we at now? That's the question. And before I think I ended the last video, it had gone up, and yeah, that's why I drew this green line here, was because it had gone up. I had sold I think here 18 is where I sold, or was around 1820. It was around, let me double check. Sorry, I've been scalping so much, I had to check the right one. 1818, yeah, I got 1810.91 to 1818.60 was my first one. So got out there, or at least the biggest portion of mine. I kept a smaller portion in, and then I was waiting to see how it was going to react to this bearish order block that was right here. And then once I saw it got past it, I waited a little bit because I still wanted to see if it was still going to get higher. And it was going back and forth, so I was, and it was, you know, and there was this, you know, bullish order block that it was hitting, but it was going below. So that's what was scaring me about getting back in, going long. And it wasn't until it actually broke out of this whole bearish, this bearish order block area, which is what you're seeing now, this big rectangle. That's just the bearish order block that I was waiting for it to break through. So it breaks through it, and then it comes back down and then hits the top of, or hits the bottom of it on the way down, and then I re-entered there, and I thought, since it did create another bullish order block, that right before I started filming this I would catch this and it was gonna bounce up. Unfortunately, that didn't happen. It bounced down. It's going through, it's going down, but I'm not worried. I've moved my stop losses, or at least for their original position. My other stop losses are still at the same, which is at the bottom of here, because that is the Fibonacci. So the Fibonacci helps me know where to buy and sell, because that's where the smart money buys and sells. You know, they'll wait until it gets below the 50% line because they know that's a discount, and then they'll sell above the, you know, the 50% line because you know, that's actually, I don't even think I had it here. Let me go back to the 15-minute because, or maybe that was Euro USD that I'm thinking about. Hold on. Let me go to Euro USD really quick. No, it had to be XAU. Either way, it's about the same area. But it used to be a solid block. Maybe the hour had to. Okay, never mind. I'm not for sure. It did have like two solid blocks, like next to each other. It's really weird. Okay. Either way. Oops. Let's go back here. Let's lock that in. And actually, I should move. Well, let's unlock that. Pull. Didn't mean to do that. I just meant to do. Come on. Alright. We are at the lowest point of the body, and here. Highest point of the body would be here. There we go. Okay. So. The only thing I think I have to worry about right now is a fair value backup right through here. And I'm going to change up the color so we don't get it mixed up with the bearish order block. So let's go with red and background yellow. There we go. Now we know it's different. We can put some text into it too. Let's do that. G. All right. Which would actually be perfect if it came all the way down to here. Because that's where smart money wants it to come. It's going to want it to come right there at that 79 level. That's... I wouldn't be surprised if I wake up tomorrow and it hits a 79 level and bounces off. My current stop loss is right underneath. Actually, it's about 10 pips underneath this low level here. Let me see if I can measure it out. Oh, I thought it was closer than that. It's probably because I'm not doing one of these. 7, 9, 10. $1,800 exactly. All right, close enough. So, again, what I was hoping to catch was the order block here. It did bounce off of it, but now it's moving lower. So this tells me that the algorithm is seeking lower prices. I wouldn't be surprised if this area right here where this tail is, where also this, where I put the order block, or the previous order block, or what is that? I don't even know what that is because this is the order block. We'll just move that back over here. Oh, I think that may have been halfway through. I don't know. But it's exactly in line with that. Yep, it did get past that. So, which tells me it went for the liquidity. So I knew it would do that. Okay. how much farther till it gets to down here? 1813. Four more dollars. Which isn't much, depending how much you're leveraging. I'm not leveraging too much right now because it is nighttime trading. It is an Asian session. We're rolling into the Euro session right now. So things could be starting to mix up very, very soon. It's 12:42 a.m. Central Time. And we're going to see what happens with gold. I haven't done a gold thing. I've always been doing crypto. I haven't done any kind of Forex or anything like that. I do want to check out Euro because I'm still in Euro, and I knew this is going to be a slow one. I bought right there at the bottom, and if you check out my Instagram, you can see my MetaTrader at the exact moment I bought. It's really creepy. It's how at the very, very bottom it is where I bought this as it was coming out of you know, the phase, the in between days phase. So out of the New York market, the brokers take a break, and then the new day starts in New Zealand. And so, but this is our local time, this isn't their time. So technically, this is when the new day starts. When in actuality, the new day starts at midnight in New York. At least that's when the algorithm starts. I know you guys think, oh, you Americans, you guys think you're the best, and the algorithm is always, you know, in New York time. But I hate to tell you, but it actually is, because if you actually, it's not so much with crypto, but it is with Forex and things like commodities, and well, of course, you know, the indices and things like that. The time that you'll get the most volume will be during the London session, right? You'll get some kind of movement, a lot of movement out of the London session, and then you'll get a little bit more out of the New York session. Sometimes you'll get a lot. Like today, we got a lot out of the New York session, and it happened later on in the day. Usually after 11 o'clock, you don't stop, or you stop trading because there's nothing more to do. But when there's something on the calendar like the FOMC, expect volatility. And it was the same thing last Wednesday, I want to say, where I think the European Bank had some announcements to make, and volatility just went absolutely, no, this is just the other day, wasn't it? Volatility just went absolutely crazy. I want to say it was on a Tuesday or Monday, maybe. I don't know. All I know is I was up. So it wasn't last night because I went to bed a little early. So it was Tuesday night. I think the volatility just went crazy, and it was in here. No, it was in, I think it was in the British pound. Hold on, let's go back to Forex and find out what day that was. Okay. Wasn't this one? Wasn't this one? 15th now. It's Monday. It must have been last week. But that's weird because I was up. Oh, yeah, GBP was going crazy because of the 30-year bond auction. Go back. Huh. Or maybe it was it today? Oh, it was. It was in the middle of the night because I was up until about 3 o'clock. The German 10-year bond auction caused a lot of volatility in the euro. So that was about 3 o'clock in the morning. I'm in the hour, so right here I can see it now. This area. Wasn't it this area? Yep. There's 3 o'clock. Let's get in on the 5-minute on this. Wait, I'm way ahead. Yeah, it was right here. I was trying to trade it, but I couldn't figure out which way it was going, so I just set off at the sidelines. But if I was smart, I would have looked over to the left and saw that there was this right here, which was, you know, 2 equal highs, so there was the liquidity line right there. So I should have known, especially at midnight. At midnight, what usually happens, especially on New York time, so I'm plugged into New York time. What'll happen is that price will go one way to make people chase it, and then after that it'll dump. So I'm hoping that's what that little dump was right there. It was after midnight. There we go. There's midnight time. Uh-oh, this isn't good. Or it could be doing the same thing. Who knows? It could come down to here and then come back up. But generally, right around midnight, you'll get the price to come back down to that area, or if it doesn't swing below that area, it'll probably come back down to that area. And looking a little bit closer, I don't have it on like microscopic view. Here's where midnight starts. There is a little bit of liquidity line below that. So I wouldn't be surprised if we do see a fall in these prices before it starts rising again. So now I'm wondering, I'm still in Euro USD. Do I And my thing was I think it's gonna get back up into this area before the end of the week. That's my hypothesis. But if that's going to happen, I mean, it could dump just a little bit below that and then go up. But the Forex factory, let's see what we're going on for today. Oh, unemployment claims. That'll easily pump it up there. That'll easily kill the dollar. All right. Let's check out gold again. See where we're at. Oh. Hey, we jump back into, I don't even know why I have this highlighted anymore, because that was mainly for the price coming up into it. But okay, I see what happened. It came up. This is where I sold. It dropped back down. I think when it dropped back down, yeah, it got below the 62 level. So that is a smart money level to where they will buy anything below 62 to all the way down to the 100. They don't, it usually gets down. Lowest it'll probably get is about the 88.6. So now that that is over, we can reset the fib. And boom, came back down. All the way back down into the 79. So the reaction off the 79. So because of the break of market structure, right? So you have, well, I guess you decided to start early, I see. We have these highs here, right? So this is where the liquidity is. Comes up to it. What does it do? Goes up through it, pulls back, goes up through it, pulls back. So anybody that had a sell limit probably got knocked out by a stop loss, possibly. Any buy stop people got knocked out by their stop loss because it pulled back. And anybody that was holding on to a sell limit, especially people that just, you know, put sell limits and then walk away from their computer and then just hope everything works out for them, and they don't pay attention to their trades after that. Those are the people that usually get knocked out the most. You have to be in tune with the market, making sure you're on top of your trades, so that way you're not getting knocked out all the time. I'm paying attention to mine. And a little bit of the red. Not too bad. My Euro USD is doing good. I feel like my gold could be doing better. Like I said, it could break all the way down through here. We do have another, you know, liquidity point to watch. Oops, not bad. Next, we could do the same. Outside liquidity. And it could be aiming right for that. I have a feeling that's what it's doing. Because we just hit this sell side liquidity. There's a lot through here. It's not gonna, you know, these are not the targets. It's the low one. But let's see here, right here, we do have a bullish order block. Stopped twice by the bullish order block. Well, if it's stopped twice by bullish order block, that's usually not a good sign. Usually it means it's going to go after it again. I mean, what you want to see, if something hits a bullish order block, you want to see it reject automatically and go the opposite way and not return to that area. But if it returns to that area, well, I can see why it returned to that area is because there's a bearish order block right there underneath it. So the battle of the order blocks has begun. We'll see which one prevails. I don't need this one anymore. This one already got knocked through and went through the other side, so that's not a good sign when it goes all the way through the order block. But we do have this order block, and let's see if it's going to save us or if it's going to come back down and then try to go for this 5-minute fair value gap. And if that's the case, I am gonna move my stop loss down to 1812, which isn't really that far. I'm gonna move myself off the charts because I have a feeling I am way in the way. Nope, coming back down, hitting that order block and going down. And going down fast. But the thing is, it's got to get through the entire order block. So I'm just going to draw another box. Let me change it a different color. Back to the other order block color, maybe. Oh no, we need a background. I don't even know what the other order block color was. Something like that. All right, we'll just leave it there. Or it, you know, here's another order block. We will see. All right, it's made it through that one. It's definitely searching for lower prices. It's definitely searching for liquidity. This is not just people selling off gold. I'm sorry. You know, it could be though, just because, you know, everybody in the European market could be waking up to the FOMC news, even though they heard about it before they went to bed. But they may have not have had a way to, you know, sell off their investments. And now they do. Well, the market's technically not open right now over there, is it? It may have just opened. All right, here we go. Order block number 3 is third time's the charm, the luck that we need. I don't think so. I think it's gonna break through it. And there it goes. Sorry, this one's gonna probably be a little bit longer than just a quick technical analysis, as we're doing some live trading, some live technical analysis. Now it's going. This is the one I was looking for. This is the one it's heading for right here. Now it's gonna stop, make you think that this is the new support zone, right? So that's why it popped back up. Gonna pull back down and go right through it though. I don't know how many times I've seen this happen. I've seen it happen on Bitcoin so many times, it's not even funny. To where you have a lower spiked area, it comes down to that lower spiked area, and then all of a sudden it pops back up, and I guarantee you everybody's chasing the price at that point. They're like, yes, we know that's the, you know, that's the support area, buy, and then all of a sudden the bottom drops out and it drops like $2,000-3,000. So I have a feeling that's what's happening with the gold right now. Yep. So you pulled up. Or it could have just held up. But I doubt it. I doubt that order block just held up. That one that's holding the liquidity just below it, right here. I don't think that's just holding up. This is the algorithm, right? Enticing people to buy. That's what this is. Enticing people to buy. They got all the way down there, got close to it, making people think it's support, enticing people to buy. People did. Well, actually, we don't really know if people did. I don't have, you know, TradingView doesn't have the software on it to where it shows the orders going through. But I guarantee you this is gonna come down, probably go right through the sell side liquidity, hit the fair value gap, bounce the other way. I don't know. I'll probably have to speed this up whenever I do the editing of the video, which I really haven't used YouTube's editing. I have the iMovie editing that I do. I'll have to I don't even know if YouTube has a speed up process. I don't know. See, hanging around, enticing more buyers. Got down almost down to the same point, pulling back up. There you go, boom. So now you got this. You got the people that entered already going along. And then now we're waiting for it to cross this threshold. Pull it down a little bit if I can. Well, we turn off that. Come on. Come on, Magneto. There it goes. Goes attacking the sell side liquidity. Boom, boom, boom. Going down. Fair value gap. Hasn't entered it yet. There we go. There we go. Executed my buy limit. I think that was by buy limit. Yep. Now look. Pulling out. It may go in for a little bit longer. I wouldn't be surprised if we see it get halfway through to about 1813. Who knows? It may just keep going. I doubt it though. There is... I did the TA on the other side, and it would have to go pretty deep for no reason. I mean, to try to get back down to 1800, I'm not really seeing a reason why it would do that, unless the news today just really was some really bad news. All right, I'm gonna get close in on this. Oh wow, it's really getting in there on that fair value gap. More than halfway. I was about ready to measure halfway to see if it'd get to the halfway point. It did. You know. All right, now it's backing itself back out. That's what I was expecting. Excuse me if you hear a popping noise. I'm about ready to open a cold beverage of Rockstar Punch. So, what can I conclude about this? If it continues to go up, my thesis about moving the Fibonacci was wrong. Oops, didn't mean to do that. Where's the Fib? Oh, right here. I should have kept it here because look, about halfway through, that fair value gap is right around that 79%, which is where you see a lot of the reactions. Like, it's already popped up all the way above this outside liquidity line already. Okay, so now it's pulling back down, trying to get people to chase it. I think it's gonna eventually turn around and go back up. Finding itself confused. But I don't see a reason for it to go any lower than this. If it did get any lower than this, it would be to completely fill in this gap. All the rest of these, I mean, they are kind of liquidity points, but I wouldn't expect a group of people to think that this is the new support, or this is the new support, or this one's the new support, or this one's the new support. Everybody knows that, you know, you would call this a stop hunt. You wouldn't recognize that as support. You would need a lot more evidence to back that up. Anyways, I know this has gone to about an hour. What I thought I was gonna catch on video, you know, hopefully, you know, sending it off at, where was it? I think it was right here. I think I already, yeah, it was right here. Trying to catch it there, and trying to catch an order block, send it off the other way. That way we could try and get above these areas here. Those hopes and dreams did not matter. Oh, look. Wow. And I'm out. Or no, wait. Oops. I left my... I thought I was out. I was talking about changing my stop loss to here, but it's still down here at 1810. Or not 1810, sorry. 1800 exactly. I may want to move it up now. I think I'm going to do that. But it did come in. It completely enclosed the gap. And definitely moving my stop loss to the 100 mark, just to mitigate any more losses, or any losses that I could incur from this. Wait, did that get below any kind of liquidity point? No. It did hit. I guess you could consider this whole thing. Well, no, you can't. Never mind. This has too much of a tail on it. This could be considered a order block, as it is very much so engulfed by that green candle. Only problem is there's not that much of a body, and that's probably why I'm not surprised it didn't come all the way down here to the 88.6 and hit the body of the candle. So that's still a possibility. But man, this video's gone on way too long. Yeah, okay. I'm gonna have to get off of here. Sorry, I don't want to wait. You know, nobody's gonna watch an hour of this video. But at least you got to see some real things in real time. You could see why the price was going as low as it was. There was a fair value gap down here it wanted to attack. You know, that part left open was basically an invitation for price to come down and balance. Not only balance, but this is the area right now that smart money is loading up on, right? Smart money is loading up so much. I have a feeling anyway that they're loading up on longs right here because it's at the 79% level. It's not the 62, it's not the 70.5, it's at the 70.9 or 79, right? So that is about as, you know, I mean, that's like, think about going shopping and you go for a pair of jeans, and the pair of jeans are usually like $150, and you walk up to the counter and they're like, oh, they're 80% off today. You're like, what? And then you go back and you buy how many more? 10? Because you can afford it, because they're 80% off. So or maybe 5, maybe buy 5 more, because that would equal the same amount. That's what's happening here, right? Whatever they could afford up here, down here they can afford 5 times as much. So that's why they're definitely loading up on longs in this area, and we're probably going to see an explosion. Not really an explosion, but we'll probably see higher prices tomorrow from this area. I don't know how much higher. I don't know if it'll get above this. My personal opinion would be yes. Probably around this area. Well, this area, it did already dip into the fair value gap a little bit, almost equal highs. But we'll see. We'll see if this will push it up. Like I said, unemployment claims coming out tomorrow. Sorry about that. What else is coming out tomorrow? Or today? Unemployment claims, Philly Fed manufacturing numbers. That's pretty much it. Just the unemployment numbers. CB leading index, natural gas storage. Those aren't that big, but the unemployment claims, especially if they are on the rise, which they really haven't been. Previous 376, forecasted at 360, so we're forecasting them to be less than what they were previously. So if that number is, 370, that's bad for the currency. We could see a spike in gold, and also foreign currencies such as the euro, which just happened to drop way out of nowhere. Oh yeah, it is 2 o'clock in the morning. I forgot. So the euro market's open. So of course the euro market, you're always going to get some kind of big, always, I don't know why it is, the euro market, you always get some kind of either big drop or big run up. And it looks like it was headed for this low liquidity. Who knows? There was probably a lower liquidity than that. Let me get to the hour and find out. Nope, it already went through that one low liquidity I was talking about. It stopped right here. Oh, the order block. Look at that. Went right to the order block I was talking about. And then turned around and went the other way. Interesting. So now, to be honest, we'll probably see higher prices throughout the night on Euro USD. Even though I was gonna do one on Zcash, I'll do this tomorrow. I was gonna teach about liquidity points and where to look for, and how to know how to attack them, how to know when to trade to attack those liquidity points, things like that. I'll do that one tomorrow. But for now, what I need to use this for is the DXY. hello. As you can see, I definitely use a lot. Wait, the DX, let me go to the 5-minute really quick, because if the DXY didn't make that big of a move, it made a decent move up, but nothing to cause a disturbance like it did for Euro USD. That's a huge drop compared to what would be the opposite of the DXY, the dollar index anyway. So what am I looking for here now? I'm looking for something and I can't remember what I'm looking for. Oh yeah, the decline in the dollar. So now that we have the dollar out, here is the sell side liquidity. As you can see, we have a couple low points, and this right here would be the sell side liquidity that I think the dollar will be going after, which would be pushing both the euro up and also the dollar up. So because the XAUUSD, XAU is the base currency, so that's versus the dollar. So anything that is the dollar, anything that goes against it will basically be the opposite of it. Same thing, Euro USD. The euro shows up first, so that is the base currency. It's going against the dollar, so if the dollar is going down, then the euro is more than likely going up, unless they're both going down at the same time, which is very rare. Generally, the euro and the dollar are almost complete opposites. So we can go to DXY and do a comparison. You can just see how opposite. Oops, I put the DXY on the DXY. Yeah, like that's gonna help a lot there, Tyler. So let's do compare DXY. Look at this, exact opposites. You can, even in this little dip here, came back up, crossing through here. This one came up, this one came down. I mean, they're literally exact opposites. So this shot up, this went down. So, and generally that happens with the GBP as well. So, but the GBP has been acting very odd lately. Sorry, I've just decided I'm gonna make this a long video, and if people want to watch it, they can watch it. GBP USD. There we go. I haven't been paying too much attention to this one, only because it has been acting so wonky lately. It's been making no sense. Okay, so today it did the same thing. It fell when everything else fell. Where's midnight? Midnight. It's midnight. We'll see. I don't know. So like I said, midnight is when the new algorithm starts. Here you have buy side liquidity. But on the other hand, you have basically a whole row of sell side liquidity, which is interesting. So, which means that there has to be a reason why it would not push through to go any lower. What was that reason? Let me look to the left here. It looks like there was a tiny there it is. There was a tiny little order block. That's the word I'm looking for. Little bitty order block right there. The price comes back up, comes back to the order block, rejects, comes back up. Now what's the now there was the buy side liquidity here before midnight. Boom. Then after midnight, right at 2 o'clock, right on the dot, breaks that and then breaks lower. So anybody that was looking to go short here probably got knocked out from their sell stops. Anybody that was looking to go long here got knocked out from their sell stops when it dropped. So now we're looking at GBP and seeing if it's going to go lower or it's going to go higher. I mean, technically, the hypothesis is it should go higher if the dollar is going to go lower, right? And what would make the dollar go lower? Well, you got the sell side liquidity here. Let me drop out here and go to hourly chart. See if there's anything above the dollar, above the price of the dollar. It looks like it liquidity line way back here. Let me see the price of this. 91,436. I'm going to draw this all the way across. $91,436, 91,436. So that liquidity line has not been broken up until just now. The dollar broke. Get that off the auto log. Come on now. God, I got lines everywhere. Let me get rid of some of these. Well, at least the Fibonacci's. So the dollar comes up, breaks the liquidity line, breaks the liquidity line. Now, I don't know. I really don't know if the dollar is going to go higher or not. It looks like it has the ability to. Looks like, if anything, the dollar could be going for this weekly fair value gap here if it does go higher. I was thinking the dollar was going to go lower because of the sell side liquidity, but what that did was fill in the fair value gap, and there's a smaller one and a bigger one underneath that. So I was thinking the dollar would probably drop into these fair value gaps before coming back out. It did break that liquidity line to try to, you know, as that resistance level to get those people with those sell limits, right? Trigger the sell limits. Probably didn't knock them out there. But it did trigger the buy limits, knocked them out by pulling back this far. Now this spike up here probably could have knocked out anybody with a sell limit with a tight stop loss. And now we gotta see if it's gonna keep going down, which I think it will. I think it's gonna keep going down, especially since I'm in the 1 hour. If we get into the 4 hour, it's at its own spot in the 4 hour fair value gap. It could run sideways and then run down throughout the night. Who knows? Anyways, wow, that was a lot of talking, a lot of explaining of what smart money is and what it can do for Forex, gold, everything else. So I hope you learned something on this video. I'm sorry if it wasn't crypto and not your favorite thing to watch, but I did try to incorporate as much smart money, you know, PDRAs in there as I could, you know, the logic behind it and all of that. So if you do like what I do, you do like my work, please do something, help me out, subscribe, like, tell your friends about me. I do have a Patreon, only $3 a month. That's it. That's like if you're going to buy like an energy drink or something like that. I do that just because I have a lot of subscription services that help me out with this this podcast. You know, it helps sets off those costs. And every once in a while I'll do a Q&A. I've done special you know, basically deep dives into certain things with smart money that I can't talk about on YouTube, and there's reasons why, and I can talk to you about that on my Patreon. With that being said, that's it for me. I'm out for the night, and remember to just keep on your pants.